Hi, I'm Kirk Spano. I'm the owner of Blue Mound Asset Management, and I'm here to talk to you about your 401k plan today. Just a little history on my involvement in 401k plans. I was selling plans back in the early 2000s when the options just weren't as good. I ended up getting out of the business because I thought the plans were too expensive and not particularly effective. Fast forward to about 3 years ago, and technology has created platforms and plans now that are about half the price that they used to be. And the investment selections are very customizable, including the ability to actually have an advisor help you manage your plan. In fact, one of the options in your 401k plan, if you are working with me already, or that you could have if you choose to work with me, is that I can manage a portfolio within the plan for you, in addition to options that are managed by BlackRock, the biggest investment manager in the world. So whether you want to self-manage your portfolio or get help from me or BlackRock, or you can bring your own advisor, those options are now there. Why don't we get started here? I'm going to do a little screen sharing and show you what these plans are now set up to be. So your 401k plan and investment choices summary. Pretty straightforward approach. This will only take about 3 to 4 minutes, and then you can contact me when you're ready if you're a participant to help you select your investments, or if you are a 401k sponsor, please give me a call and I'll show you how you can save a lot of money on the administration and implementation of a 401k plan and select better investment choices. So a little bit about my investment firm, Blue Mound Asset Management. It is a Wisconsin registered investment advisor. I am the founder. I've been pretty widely published and interviewed in the press. You can find me with a pretty simple Google search. I apply a fiduciary standard, meaning that all of the investments that we make are in your best interest as far as I can tell. And the fees are pretty straightforward. If you make extra money, I make a little extra money. If you lose money, my fees go down. Also, there are no commissions at all. I have pretty limited engagements. I only take 3 or 4 new clients per month so that everybody gets the attention that you deserve. I'm using advanced technology, including 2 AI systems, which have proved to be extremely helpful and frankly have improved the performance of the investments from what I can tell. Either that or I've gotten smarter with age. Hopefully that's true too. We're using some free and leading financial planning software from Right Capital. Everybody who works with me gets that for free. When you take a look at your 401k plan, there are a number of problems, and the new platform that I'm using from a company called Employee Fiduciary solves those in coordination with my firm and me. First off, Employee Fiduciary offers coordinated back office services, so you don't need multiple people working on your plan anymore, or multiple firms. The third-party administrator, the record keeper, that's all bundled into one. And essentially, you're saving about 50% on that if you are the employer. If you are the employee and you're a contributor to the plan, that means the fees being taken out of your plan are also lower, which means more of your gains in the markets go to you rather than an administrator. The plan is relatively simple. I'll show you that in a minute. There's 2 levels of service. You can work online on your own, or you can work with me, or you can combine the 2 things. You can bring in your own financial advisor as well. This is among the lowest cost plans out there. In reality, some of the old plans are charging 2 to 3.5% to administer the plan and provide somebody to help keep an eye on it. The total administrative cost on this plan is roughly 1% when my fee is included. And then the investment selection fees, because we're using low-cost ETFs, exchange-traded funds, for the majority of the plan, you're looking at maybe another 1/4 point. Some of the investment selections are even lower. There are 36 investment choices for any risk tolerance, any type of management that you may want to employ. You can use index funds. You can use BlackRock to manage a portfolio for you. You can use me to manage a portfolio for you. You can mix those things together. And I have included sector and international funds so that you can really build out an asset allocation. The reality is that you probably don't want to do that unless you're familiar with building asset allocations as a do-it-yourself investor with some experience and education. Really, I use those to build your asset allocation for you, or at least for part of your portfolio if you choose. The enrollment process is pretty straightforward. There's a video that you'll see linked below this one that you can watch. Employee Fiduciary also has a great resource center that you can visit. And of course, I'm always available. So this is where a lot of people get confused. This is where they throw up their hands. And I'm trying to help you find a solution for that. So whether you're, again, if you're very self-directed and hands-on, we have some great choices for you in here to build those asset allocations. Or if you'd rather have somebody do it for you, or multiple people do it for you, whether it's me, your financial advisor, or BlackRock, or some combination thereof, that's available too. Here are the investment types that you have in the 401k plan. You have target date funds managed by BlackRock, and BlackRock is the biggest investment manager in the world. They own iShares. They have helped the government handle some of their money, particularly during the bailouts with COVID. I offer what I'm just calling the Blue Mountain Growth Fund, and what that is for is if you're, I'd say, more than 5 to 10 years away from retirement and you want a more aggressive approach with some or all of the money, then I would encourage you to take a look at this Blue Mountain Growth Fund. What I'm doing is I am using the other funds in the plan to build an asset allocation, and then once a month I update that asset allocation. So I am taking from the index funds like the S&P 500, the NASDAQ 100, which is represented by QQQ, you may have heard of. Factor funds, these are funds that are basically index funds, but they have a few financial criteria to kind of pull out the crummy parts of the index. And in general, the ones that we have picked out have all outperformed their index. So with a few financial tweaks to get rid of, say, companies that aren't profitable, that sort of thing, or don't have any growth rate, these factor funds have in fact outperformed. And then we have sector focused and international funds. Really should be 3 more dots, but this is what the template gave me. These are funds designed to help you invest in a sector of the economy, such as technology, or a theme like clean energy, or international investments such as the Asia 50 fund, or investing directly into India or in Latin America, ways to capture gains typically that I use after a big correction when rebounds are just getting started. So we will buy different sector focused and international funds when there's been a correction, or we see these as being undervalued and the momentum is starting to shift up. So I try not to buy these on the way down. Nobody's perfect. It happens. Sometimes I think it's done going down. It goes down more. But in general, we're using artificial intelligence and technical analysis to try to minimize the amount of risk when we use these funds. And that's why I tell people, be careful about doing that all by yourself, because the tools that hedge funds, institutional managers, and boutique registered investment advisories like mine use are pretty sophisticated. So we're looking to minimize risk as best as we can, as well as offer some extra upside or alpha. Why did I pick off these funds? Really, I've started to cover that. I'm looking for funds that can outperform without taking on extra risk. So if you take a look at this grid here, we have the indexes, which are super low cost and very diversified. We have the factor funds, which are in fact pretty diversified and pretty low cost. The sector funds, in fact, are pretty low cost, but they're not diversified at all. Target date funds, which are you're paying just a little bit extra to use BlackRock, and those are very diversified. So I would think of those like the indexes with a similar diversification, maybe a little bit more because of the bond exposure. Indexes are typically just equities, but you're paying a little bit of money for that. The Blue Mountain Growth Fund, in reality, you're not paying any extra for that because my fee incorporates the entire plan. What I'm invested in are the sector funds, the factor funds, the international funds. So some average of these expenses. I put it over here just to represent the most expensive edge, to be conservative. And then the international funds, which will actually typically be the most expensive. Probably could move this a hair that way, could probably move this a hair that way, but didn't want to put it over the lines. Nothing is expensive. In fact, the most expensive things here are average expense compared to the rest of the industry. And almost everything, I'd say over 30 of the investment selections are well below average cost, with your indexes, sector funds, and factor funds being very, very cheap. Again, the target date funds are run by BlackRock, the BlackRock LifePath Dynamic 2030, 40, 50, 60 funds. If you are right on top of retirement, you use the 2030 fund as it's the most conservative. And then you push these out based on how far away you think you are from retirement. Blue Mountain Growth Fund. Again, I'm using the whole range of investments. I manage it tactically, meaning that once a month I go in, I take a look, and I get rid of things that are underperforming or I think could underperform. Again, best of my ability, no guarantees, but we are trying. Position trading is what it's called, meaning that we will typically own a position for quarters or years, and only tweak around the edges, except when we think there's a big event coming. At the end of 2021, I wrote several articles that described how the stock market was overvalued and that we were going to raise some cash. So at the end of 2021, and these articles are out there in the public, you can find them, I told folks I wanted to get to about 20 to 40% cash, basically reducing my exposure to the stock market. Well, we ended up getting, over the next 14 months or so, a 27% correction in the S&P 500. Our point to doing this is to manage risk first. So if you want super aggression, this is the place you're going to get it the most, because I am going to keep the money mostly invested most of the time. If you are concerned about risk management, this also gives me the ability to protect you if I think you need to be protected. And again, I won't be perfect, but I try, and it tends to work out fairly well. You can follow me in the press or on my website at Blue Mound AM. You can see that behind me. I do videos on YouTube under Investing 2020s. You just go on YouTube and put that in, or put my name in, and you'll find it. So you can keep up with what I'm doing pretty well. And again, I'm using a full range of investments. This is what an asset allocation looked like recently. 10% was in the money market. And then this is what we owned until recently. If you'd like to talk, it's very easy to get a hold of me. If you're a member, you're a participant in a plan that I'm working with, you get a free consultation on plan setup. You also get a free annual retirement consultation with me. You'll get a chance to talk to me every year. I know that one of the problems you've had or may have had is that you don't get to talk to anybody about your retirement, even though you have a retirement plan. I'm here for you every year. And if you have any questions or you want to set up an additional time to talk, don't hesitate to contact me. Just go to bluemoundam.com, sign up for the website. It's free. You'll be able to use the contact form to schedule a time to talk. My phone number is on here. Don't call it because I probably won't answer. Set up a time to call. Everything I do is scheduled to maximize my effectiveness. And just pick a time on the calendar that pops up and have at it. So we'll talk. We can either get together, we can meet at a coffee shop, I can come by you, we'll figure it out. I do work from home, and I travel probably 4 months a year. So there is a little effort in getting together sometimes. There's a lot of Zoom calls. You'll also want to go to the Employee Fiduciary website, employeefiduciary.com. They have a great resource center. The more you get involved with your own retirement planning and financial planning, and the more you learn, the better off you'll be. So between me, the technology, the various resources, I'm hoping to try to help you retire with more money. And maybe for a few of you, get to retire a little bit earlier. If you're a plan sponsor, I can help your pocketbook because these plans are much, much cheaper. I encourage you to go check out the website than what you're probably using. If your plan is more than 3 years old, I pretty much can cut your expenses probably no less than 30%. Usually it's around 50%. Sometimes it's as high as 70%. That's general range on the fee savings. And then hopefully I've impressed upon you that I'm, I'm limiting my scope to be able to give you the great service that you deserve. And again, check me out on the internet. Find the articles I've written, things I've said over time. Again, not perfect. I have a lot of happy clients. It's one of the reasons I spend time traveling is I visit them all over the country. I've set my business up this way to be able to travel because I like to travel. Love to help you. Get a hold of me at the website. And again, call me with any questions about the 401k plan.